Hello and welcome. I'm Amritan Shira and you're watching Law of the Land on Raj Sabha TV. Today we bring to you the National Housing Bank Amendment Bill 2012. The bill seeks to enhance the operational powers of the National Housing Bank. To discuss the issue, I have with me Mr. Jyotirmay Jain, Senior Advisor, Banking, ASSOCHAM, and Mr. R.M. Sinha, Advocate in the Supreme Court. Now for the headlines. The National Housing Bank Amendment Bill seeks to empower the National Housing Bank to finance all housing non-banking finance companies. The bill allows the central government to own National Housing Bank. And the Reserve Bank of India will retain powers to regulate and make policies for the NBFC's policy. All the non-banking and finance companies operating in the housing sector will now be financed by the National Housing Bank. The NHB will now be owned by the central government and not by the Reserve Bank. The National Housing Bank Amendment Bill 2012 seeks to enhance the operational powers of the National Housing Bank and at the same time seeks to avoid any conflict of interest with the Reserve Bank of India.
The National Housing Bank Amendment Bill seeks to regulate the housing finance sector by making National Housing Bank (NHB) the nodal funding agency. The bill proposes to eliminate the ownership right of the RBI on the National Housing Bank. The RBI is now expected to transfer all the shares it holds to the central government.
The regulatory role of RBI is enlarged with covering the housing finance companies also which were not under its ambit earlier. Thus, more uniformity of regulation was ensured. Second, NHB as a promoter and facilitator of housing finance was constricted by its regulatory roles in the past. For example, NHB could not really freely invest in the equities of housing finance companies because there was seen to be a conflict of interest between its role as a regulator and as an investor.
According to the bill, the National Housing Bank (NHB) will be expected to transfer its surplus to the central government and not to the RBI. The bill empowers the central government to increase authorized capital of the NHB. The bill empowers the NHB to supervise and finance institutions in the housing sector. It increases the net own fund of the housing finance institution from 25 lakh rupees to 2 crore rupees. The bill proposes to add non-banking financial companies (NBFCs), mortgage guarantee companies, securitization companies, reconstruction companies and credit information companies to the list of institutions that the NHB can deal with.
The government's feeling is, let this be a separate entity from the Reserve Bank of India. Reserve Bank of India will only regulate it. Let this be a central government institution so that the central government can on time-to-time basis induct capital, induct talent, induct procedures, induct reforms. Because no one can take for granted that the housing industry is not going to grow.
The National Housing Bank law was enacted to establish a nodal agency to promote housing finance institutions at local and regional levels and to provide financial help to them. The National Housing Bank law was last amended in 12 years back to increase the authorized capital of the National Housing Bank to 2,000 crore rupees. As of now, the National Housing Bank can transact business with housing finance institutions, scheduled banks, and the state cooperative, agriculture and rural development banks. If we go by the expert opinion in banking and housing finance sector, the National Housing Bank Amendment Bill may not have a direct impact on the common man, but giving freedom to NBFCs will definitely improve the condition of housing finance in our country. With camera person Gajendra, Raj Kamal, Rajya Sabha TV.
To ensure uniform control over non-banking financial companies, including housing finance companies, the registration and regulation related powers over housing finance companies are proposed to be transferred to the Reserve Bank of India. My question to you, Mr. Jain, straight away is the segregation of NHB with RBI going to really help the housing sector?
Definitely.
How is it going to
Yes,
happen?
because now housing is a big industry which has to grow in days to come, and perhaps the government's agenda is also to bring more affordable housing. Now, once national housing has a free liberty to operate in a different spectrum also, they will be able to raise a lot of money, they will be able to bring in a lot of technology, they will bring in a lot of cost reduction in the housing sector, and perhaps this is a bold step taken by the government.
But the RBI's intervention in NHB has been kept there, although limited.
No.
Is that going to have an effect?
No, because regulation has to be there. After all, NBFCs have to be duly regulated. I mean, it can't be a situation where you can have a free word. So once RBI is, because RBI is adequately equipped to have a regulation and to oversee all these NBFCs, so registration has been transferred to the NBFC, all NBFC banking companies. Registration has gone to RBI. Now, once RBI has an overall supervision, it can have a better compliance, it can have a better governance in these NBFCs companies.
Sir, getting the central government to own National Housing Bank, right, which was earlier completely owned by the RBI. Why was this essential, according to you, legally? What was the legal issues or administrative issues that could have actually inhibited NHB from going the way it was designed?
IMFSI, I do not see much a legal interference in both these, in this particularly when something has been taken out from RBI and given it to the National Housing Bank. It appears more that since the housing sector is rising, so they need to have a separate institution, independent institution to deal with the demand and to deal with all these things. Yes, so far as control is concerned, control remains with the Reserve Bank of India. It may be a non-banking institution, it may be a banking institution, everywhere they may
all regulatory function.
All regulatory function is with the RBI.
Right.
That is to see that there may not be golmaal in finances.
Absolutely.
So RBI has a control. But to my mind, there is not much legal. I don't see much legal interference so far as shifting some function, taking some function from RBI and giving it to the National Housing.
The impact of central government owning NHB. Earlier, RBI used to own National Housing Bank. The impact of it especially on NBFCs, on housing banks and other financial agencies. How do you see it impacting?
Once the ownership shifts to central bank, the central government, the central government will have a wider role to play. Now, once this thing comes in, the NBFCs will have to feel some heat because they will have to have systems in place and the disclosure norms will improve. And perhaps what the government wants to bring in the housing, affordable housing, like cost of reduction in the cost of building houses, then more competition and more technology and more energy savings. So that way the government has a wider role to play. Because now on the board of the National Housing Bank, there will be a wider representation of talent. This will be going to be one of the major factors in improving the housing sector in this country.
Which means policy interference, it will be able to ensure and set policy in place which will benefit the normal,
I hope you are right.
Yeah.
Because when it was with the RBI, it appears that central government was not more free. RBI would have had its own poking when the policies are going to be made with regard to the housing sector. Now taking it and giving it to the National Housing Loan and what it called, National Housing Bank, and then owning by the central government means the central government now wants to take over the entire business of housing sector and to promote it.
And also transfer the way it is mentioned here, that now the NHB will transfer all the what do you call capital? Yes, to the central government. How do you see that happening, and do you at all see central government trying to take over a large pie of financial activity into its direct hand and take it away from RBI? Do you see a vested interest of this government there?
No, I think that globally there are various functions which the regulators do. Now, there is always a need to isolate the ownership from the regulation.
Right.
Now, RBI was having the ownership also and regulation also. There were certain areas, grey areas, where RBI, despite the fact they wanted to do a lot of things, could not do it. But now RBI will be free, will have more powers to regulate because ownership lies elsewhere. So there will not be a clash of interest.
Conflict of interest. And how important is it to actually eliminate conflict of interest for an institution to really grow the way it wants to grow? How important is that aspect?
It is important. The point taken by my friend is a very correct and a very logical. Because if you have the ownership, maybe you have your own hesitations to do it, because you yourself is the owner of that particular institution, and now giving it. But the object which I see out of this amendment, taking it from RBI and giving it to the directly or indirectly under the control of the government, is that the central government, the government really wants to have much flow of fund in the housing sector, and they are giving housing sector very much importance. They do not want that IBI should make intervention while making the policies with regard to the housing sector.
Perfectly all right. See, also NHB has been given tremendous powers. Like for example, the Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act, which is SURFACE Act, has been altered to give certain powers to the NHB to interact with a larger section of financial institutions. How do you think is it going to impact the financial institution on one side and also the NHB and its powers?
No, those NBFCs engaged in housing now will, and the other banks which are engaged into housing finance, now there will be a lot of competition. Now once you have competition and the ultimate the benefit goes to the house owners. Now here especially when the government has inducted its own capital, the government will be at liberty to frame such laws which will be beneficial for the house owners. So ultimately, the National Housing Bank will be an institution which will be more focused, more professional, and more widespread board to give them the right road ahead for the housing sector.
Interaction, financial. See, financially, NHB now suddenly has huge powers to engage with mortgage companies, security companies, financial companies, reconstruction companies, etc., etc., etc. All of them which are there in the Securitization Act, in short, SURFACE Act. How is it going to strengthen the flow of funds between these two agencies and the monitoring of NHB on these activities? For example, what happened in US? Will we be able to prevent something like that from happening if NHB becomes stronger?
See, there must be a government control on all non-government organizations. You may now say it to be all non-government or non-banking organizations. There must be some control by the government. And the basic law creating the relationship between the borrower and the bank is not going to change. That will remain as such. Having the control on all these, what you are talking is non-banking institutions by the National Housing Bank is always healthy. It is always in the interest of the borrower also. Because non-financial or non-banking institutions, they sometimes cross always the limits. They play with the money.
Yeah.
And which precisely is to be checked. So for this, there must be some control. Control of the National Housing Bank, if it's there, it means directly or indirectly controlled by the government.
And it is going to benefit the consumer.
And it is going to benefit the consumer. It is also going to ensure that arbitrariness is not coming in the to assist all these non-banking institutions. They cannot arbitrarily play with if they are under the control of National Housing Board and then regulated by RBI, Reserve Bank of India.
You had a point to make on that?
See, what I feel is once you have a specialized agency like National Housing Board, a National Housing Bank, now it will have access to the best practices globally, and this can be the benchmark for all the other NBFC companies which are functioning in this country. See, after all, the issue is to bring more competition in the market, in the housing market, so that the cost of houses comes down. See, when we talk of affordable means it should be affordable.
Is it actually going to happen?
No, it's going to happen because. See,
how many years?
No, I'll tell you, because the now focus here will be, more focus will be on how to reduce the cost of the construction. Now, for example, see, in India, you have people, if you are constructing a house, you have the frame at 7 foot 4 inches, you make it at 6 foot 4 inches. So there are a huge number of unstandardized things. So once you have standardized things, like you have three dimensions in the windows and 3 of the doors, and standardized kitchen and room. So once you have those things, you can produce them on mass scale. The cost is going to down. And this should be one of the factors which the National Housing Bank should look into it and make it mandatory for NBFCs, housing NBFCs, that they should stick to these standards, because we are talking of affordable, not luxury. Affordable means cost is the main factor. Affordable by the people.
Right. Time for us to head into a break. When we come back, we will talk about the role of the Reserve Bank. Welcome back. The National Housing Bank Amendment Bill proposes to alter the role of the Reserve Bank. All the financial policies of non-banking financial institutions will now be decided by RBI, and it is being empowered to suspend the licenses of any financial institution if it is found lobbying for deposits of money from the public. Earlier, this power was with the National Housing Bank.
The proposed National Housing Bank Amendment Bill empowers the Reserve Bank of India to take up all regulatory activities of non-banking financial institutions. Reserve Bank will now have to monitor the maintenance of assets in financial agencies. It will also monitor the reserve fund available in non-banking financial companies, NBFCs.
What happens with this now separation of roles, RBI will be more effective in regulating all these housing finance companies. Another shift which is being brought, that is accepting of deposits from public. And normally for every regulator, just like SEBI and IRDA, main concern is public interest. So they will be taking care of public interest. They will be vetting all the prospectus for raising deposits by HFCs. And in case of default, they will be in a position to impose penalties also. At the same time, even CLB is also given powers to impose penalties and ban these companies from acceptance of further deposits for a certain period of time, as they do in case of other private companies.
According to the proposed bill, the RBI's role will be of registration and maintenance of net owned funds of NBFCs. The bill empowers the RBI to regulate or prohibit issue of prospectus for soliciting deposits from the public. Earlier, this power was with NHB. The bill also empowers the RBI to determine policy and issue directions in public interest to all housing finance institutions. This power was earlier with NHB. The bill requires the housing finance institutions to submit information related to deposits received by them to RBI.
As far as the impact on the common man is concerned, directly there is no change. It is only a certain role shift which is happening between NHB and the Reserve Bank of India. But indirectly there is going to be a lot of impact, because we have always seen in the financial sector that if NBFCs are given a larger room to play, they have served the overall objective of providing access to finance.
The bill also proposes to nominate only one director by the Reserve Bank instead of the existing 2 directors that it appoints. Appointment of directors other than chairman and managing director will now be suggested by the Reserve Bank of India.
The bill proposes to strengthen the National Housing Bank role as the housing financier while reducing the burden of the RBI. So the question to you first of all is, was, according to you, if the role of the NHB as a regulator of public deposits by NBFC was not working out, then there is a need for it to be transferred to RBI. Why do you think was this done? Do you think NHB was not being able to perform its job?
No, sometimes we should not see the negative side of a thing. I mean, it is not that the National Housing Board was not competent to regulate all these things. But what I think is this, that RBI is otherwise regulating in many manners all these financial institutions. Precisely by this amendment, it was thought that let RBI act as a regulator in full-fledged manner, instead of that regulating some part by the National Housing Board or National Housing Bank and some part by the Reserve Bank. The Reserve Bank of India, being the regulating agency otherwise, should be given entire power to look after this everything. And that is how I mean, this precisely was the object, to my mind,
Right.
for bringing this amendment.
Sir, I'll ask you the same question. When NHB was nothing else but a front for RBI, it was an RBI institution, owned by RBI, managed by RBI, then and was regulating the public deposit activity of the NBFC, taking this away and now giving it to RBI, how is it going to make much of a difference?
Now see, if you analyze the basis on what this the whole thing has been done, see, RBI through one of its surveys conducted over a long time, they found out that a large number of NBFC companies, whether housing or infrastructure or capital market, they have been doing shadow banking. Now, once they start doing shadow banking, there's a strong perception in the RBI that they need to have stronger regulations.
What is shadow?
Shadow banking means you accept deposits, you keep on doing loans, and you take the loans from the banks because the NBFC banks are supposed to. Now, these loans were not given to the target groups. They were given to the builders, to the real estate owners, to the plantation. A huge number of regulatories were noticed. So, I mean, that was the basis. Now, RBI ultimately, I mean, this is what we made out from one of the surveys. They thought that there should be some regulation by which the RBI can be directly looking after these NBFCs so that these NBFCs can mend their ways. Now, housing is likely to grow. Now, once you have a total growth of 8 to 10% the next, say, 5 to 6 years, huge capacity building is required and huge amount of infrastructure is required, and housing is one of the major components of the industry. Therefore, RBI has taken a very proactive step to make the regulation more pertinent, more direct. The central government decided that let RBI be the regulator and NBFC to bring the operational and procedural and all the other things.
Can we say bad days for NBFC now?
No, not. So, see, whenever you have
more regulation, more peering, NBFC should be apprehensive.
See, what we talk of is 2G.
Initially, yes.
I mean, we talk of 2G. I mean, I'm not talking of that 2G.
Yeah.
Growth with governance means when you grow, governance has to be there. Yeah, you can't say that there cannot be an umpire in a match. The umpire has to be there, but the game has to be played as per the rules. So now they will have some indirect fear that they cannot go away with it.
Right. Especially relating to public deposits, they will be under fear, and apprehension is going to be there that if you don't do it the right way, then you are out.
Yes. Once you say RBI is the regulator, then automatically you have you feel that there is some strong body to oversee all your functions, and you cannot get away with it.
Right.
This is one of the reasons.
Right. Three things that the common man is eventually by default going to benefit in the coming time. That is standardization, as Sir said, and also cost of housing is likely to come down, and that is the objective of the central government, and that is why the central government plans to make these changes or proposes to make these changes through this amendment. Do you actually see this happening, this target being achieved, and how long do you think will it take? In your assessment of implementation of law,
what I personally feel is this.
Legislation, implementation,
absolutely,
and that level.
Absolutely. What I personally feel is this. When the institution meant for a special purposes is used for the same purpose, that always yield result. What I say is this.
RBI,
specialized.
Yeah.
RBI, as I have said earlier also, RBI had otherwise the specialization of regulating all these banking and non-banking institutions and all that. And RBI was given this power of National Housing Bank also. If this has been taken out, then the RBI was not specialized in this earlier.
Yeah. It was an additional job.
It was an additional job given to the RBI. If it has been taken out and given it to some other agency, I mean, in any name, under any name, RBI will be more effective in its own job instead of doing the other's job.
I get it. So what you're trying to say is the standardization cost
it will be more effective. The regulation will be more effectively imposed on these all banking or non-banking institutions. I mean, RBI will be more effective, A, be National Housing Bank will also be more effective in its own spheres.
Yes.
So the spheres are being divided to my.
And that will lead to value creation.
And that precisely.
And cost
yes,
being brought down.
I think
that is
that will definitely result.
I'll come to you, sir. Time for us to enter into a break. When we return, we'll show you an interview with Mr. R.V. Verma, Chairman and Managing Director, National Housing Bank. Welcome back. My colleague Raj Kamal Rao spoke to Chairman and Managing Director, National Housing Bank, Mr. R.V. Verma, and tried to get his point of view.
How the proposed amendment bill is going to change the administrative role of the bank?
It is proposed to transfer the ownership of the National Housing Bank from the Reserve Bank of India to the Government of India. As a result of this, the shareholding, which is currently 450 crores by the Reserve Bank of India, will be transferred fully and totally to the Government of India. This arose because of the fact that RBI is both owner of this institution as well as the regulator. So as part of the financial sector reforms, it was earlier suggested by the Narasimhan Committee recommendations that there is an inherent inbuilt conflict in the role, and so Reserve Bank of India should divest its share of or ownership in any such institution which it also regulates.
The bill requires every housing finance institution to submit a copy of its balance sheet to the National Housing Bank. The NHB may conduct an inspection of any housing finance institution. My question to you, sir, is the point that you wanted to make relating to the board and how the board should be expanded to include more point of views.
Now, once the National Housing Bank board expands, it should represent various sectors of the economy, like the house construction companies, the architects, so that it brings in the new blood into the board, and which will help in bringing out, reducing down the cost as well as the other factors.
So the question of the NHB has been given powers to inspect, and the moment it decides to inspect any institution, then it has to immediately after doing that, it has to report back to RBI. This system that has been put in place is a new system. How is it going to impact and threaten the entrepreneurship in the financial institution?
It is rather beneficial. Why I am saying so? Because if the National Housing Bank, if they supervise the thing and they are allowed to take action, precisely the apprehensions are more to the entrepreneurs. If they are supervising the thing and then they say that they are finding or whatever they are contending that they are not, that these institutions are not working properly, the decision is to be taken by the RBI. So they have to give report to the RBI. That will curtail the arbitrariness on the part of National Housing.
Do you think this is a good check and balance system?
Yes, absolutely, absolutely. It's
good check and balance.
It's a good check and balance, so that that you have some leeway. You see, the National Housing Bank could have taken otherwise view, but when it goes to RBI, RBI can take an independent view.
Definitely.
Absolutely.
Definitely.
Thank you, sir. Thank you, sir, for joining us on this discussion. It's time for us to end the show. You can email your suggestions and comments to law.rstv@gmail.com. You can also watch our shows on the YouTube. We'll be back with a new issue and a new episode. Keep watching Raj Sabha TV.